Hi guys, one of the criticisms Brexiteers seem to have when it comes to the European Union is that it's protectionist and it's not interested in free trade. Now, the opposite is true, as New Zealand and the European Union signed a trade deal, a free trade deal, and it's about to be ratified in the next couple of months. Now, I just want to read part of this report from the Post newspaper from New Zealand, which covered this story. Some interesting things that came out of this. It says here, from May, 94% of New Zealand product lines heading into the EU will be tariff-free. And after 7 years, this will rise to 97%, eliminating much of the $115 million in tariffs paid by New Zealand exporters to the Union. So this is a great win for New Zealand producers. Tariffs will be reduced and then eliminated pretty much within a few years. The quota for New Zealand products entering at such tariff rates will also rise, so the quota will also increase. So they won't be just limited to a certain amount of products being sold at the tariff rate. And if filled, New Zealand exporters could make up to 60% of Europe's butter imports, 15% of cheese imports, and up to 96% of sheep meat, otherwise known as lamb imports. So that's wonderful for New Zealand. They're going to be able to have a pretty big quota that's going to increase, and they could make up to 60% of, for example, Europe's butter imports. So European producers of butter would be protected, but when it comes to imports of butter, New Zealand could steal the show in a sense. Now, there was some responses to this. Not everything was fantastic for the New Zealanders. It says, but critically for Trade Minister Ted McClay, the European Union held out on giving dairy and beef products the access New Zealand sought. Nonetheless, the deal was signed. So it didn't work completely in New Zealand's favour because, of course, you're negotiating with a massive bloc like the European Union. So you're going to have to compromise. And it seems they compromised on some aspects of dairy and beef products in particular. Remember, when it came to trade deals between the UK and New Zealand and the UK and Australia, hormone-treated beef was permitted to be sold in the United Kingdom. It seems the European Union is dead set against that. Now, some other areas for example, where the European Union gave in, or not so much gave in, but forced New Zealand to give in. It says here, one of the trade-offs for New Zealand was the accepting of a number of geographical indicators designated by the European Union. Names for products that have European origins that New Zealand producers will no longer use. Feta cheese was one of these. As McClay said, Greece would not permit negotiations to begin unless this was on the table. So you can see here how two things. Greece said, okay, we're not going to go ahead with a trade deal with New Zealand unless feta cheese, the name feta, is part of those negotiations. So even different parts of the Europe, we tend to think of the trade deal taking place at a very high level, at the Brussels level, but instead you see here smaller countries like Greece have participated in a sense in these negotiations. They've had their input as well, which is important. Now, you may think, well, what's the big deal here? Feta cheese, they're not allowed to call it feta cheese. That's what's going to happen. New Zealand producers will no longer be able to use that name. So it's about protecting European products. That may not seem important to many people, but for example, for producers in Greece, this is very important. Now, another benefit for the European Union, it seems, according to the report, is we're seeing big economic opportunities for European businesses. This is from the European side. And I would like to look in particular at the investment area and infrastructure. We're looking forward to the government's upcoming privatization of public infrastructure. We believe that on the EU side, there's opportunity on wind energy, wind turbines, but potentially in other areas of major infrastructure. So it seems that parts of the New Zealand economy is being privatized. Whether that's a good thing or a bad thing, that's another story. But it seems this is going to be opened up to European businesses, European producers, manufacturing. So this is a massive benefit for European producers. They're manufacturing, they're able to access this part of the New Zealand market, which is a massive win, I believe, for them, as New Zealand is pushing very much for green energy, to be energy independent. And of course, European companies can benefit from that. So we see on the whole here, I'll leave a link in the description so you can check out this whole report. But you can see on a balance, both sides get something. both sides compromise, but at the end there is a good trade deal, it seems. Let me know in the comment section, guys, what you think. As always, your comments are greatly appreciated. Thanks a lot.